Here's a question I get from investors all the time. Should I pay off my rental properties? If you watch this channel for any period of time, you've probably heard me talk about leverage and using leverage on those properties to continue to finance properties and move your portfolio growth faster and faster to accumulate many properties at once. But today I want to give it a fair look. Should you pay off your rental properties? Does it make sense to own one or two properties that are fully paid off, giving you cash flow, or should you keep debt on those properties and continue to use leverage to grow your portfolio? So today I'm going to break down the pros and the cons of each, and we'll find out which one works for you. Hey guys, I'm Andrew Lewis, real estate investor and entrepreneur with over 10 years experience building and growing a real estate team and investing in real estate. Before we get into today's video, take a minute, hit that like button, leave us a comment below about any questions you might have, and don't forget to hit that subscribe button so you don't miss out on future videos. I'm here to help you break out of the 9-to-5, gain financial freedom, and grow wealth through real estate. So should you pay off your rentals and maximize cash flow, or should you leverage them out? Today, we will break down the pros and the cons of each of those strategies, give it a fair shake, and see which one fits, because I think each one has its place if I gave it a really fair shake. So let's break it all down. Let's start with the pros. So here are the pros to paying off your rental property. Accelerating that payment, paying it off over 30 years, whatever it may be. Pro number one is increased profits. You get to increase your cash flow tremendously if that property is fully paid off. It's logical, right? If you don't have a mortgage, then basically every dollar that comes in on that rental property, aside from taxes and some of the maintenance things that you've got going on, it's pure profit for you. So we get it. That increases that cash flow. If you have a mortgage and you've got a tenant paying on that mortgage, essentially your profits are gonna be much smaller. And that's what we're seeing right now is in the market, people are having a hard time cash flowing properties because of various factors, home prices, interest rates, all of those pieces. So paying off a home actually eliminates that for you and maximizes your cash flow to put more dollars in your pocket every single month. Pro number two is risk reduction. If you have a fully paid off rental property, when somebody leaves that property or stops paying you, or there's huge maintenance bills that come up, it doesn't hurt you as bad. You're not as subject to market fluctuations and interest rate changes and all of those pieces because you've paid it off. You don't have a payment, you barely have any sort of liability, again, outside of taxes and general maintenance on that property. So if a tenant moves out or stiffs you for a few months, you don't really have too much risk there. You're not having to make a $1,500 or $3,000 a month mortgage payment, and you're not having to scrounge together funds at the end of the day to cover for that. So it's a less risky play for you if you fully have that property paid off. It just takes that risk away, and honestly, you're probably gonna sleep a little bit better at night. Pro number three is diversification. Paying off your real estate portfolio allows you to take those funds and invest them elsewhere. You're not so tied up in real estate, and it allows you to diversify. I always encourage diversification in real estate, but tying up those funds in real estate means that you're kind of stuck within real estate. So if you pay off that rental property and you've got maximum cash flow coming in, you can actually use some of those funds to invest in other things, in stocks and cryptocurrencies and things like that, that may actually help to accelerate some of that cash growth for you. So it allows you to have a little bit more flexibility in the diversification. You're not pigeonholed into real estate per se. Some might argue that, if you have a mortgage, you can still pull money out and diversify that way. But if you have it fully paid off, you've got the cash coming in, you're free to do with that cash whatever you please and have a fully diversified investment portfolio. Now let's flip that around and look at the cons. So what are the cons to paying off your rental properties, paying it off early or paying it off over time, just having no mortgage on that property? So let's break it down. Con number one is lost leverage. So basically when you pay this property off, you've now got a gigantic bit of equity that is just sitting there doing nothing for you. It's only growing at the pace of the real estate market, but it's not doing you anything outside of that. So yes, you're getting maximum cash flow, but the idea of growing your portfolio and having things increase from there and tapping into that to continue to grow your portfolio faster kind of goes out the window if you pay off that rental property and you stick to the idea that I'm going to keep it paid off. You've got $300,000, $400,000, $500,000, $600,000 just sitting there doing nothing for you, and it could be used to diversify within real estate and buy future investments to continue to grow. So if you pay that property off, yes, it's going to maximize cash flow, but it's going to take away your ability to leverage that property using debt to go buy other things or invest in other businesses because you've got your money tied up there. So the decision's yours on if you want to sit there and maximize cash flow or if you want to have the ability to invest in other things quickly. Con number 2 to paying off your rental property is opportunity cost. And I think this is something that people don't think of often, but everyone wants to look at, if I pay it off, I get more cash flow. But you have to take a look at opportunity cost. What could you be doing with the funds from that property if it was sitting there? What are you giving up in order to gain the security and all of the pros we just talked about? Well, you may be giving up the opportunity, as we just discussed, to leverage that property to go accelerate your portfolio, but then you're also giving up the opportunity to continue to use debt on that property to invest in other things. Again, this can actually help you with diversifying your portfolio in real estate or in stocks or in businesses or somewhere else because you're able to tap into that equity. You don't just have $500,000 sitting there doing nothing for you. You're actually adopting and going into the model that I can tap into that equity and I can use it and I can go invest in another venture that is going to help me grow my cash flow. So while yes, you can increase your cash flow by paying that property off on this one thing, what are you giving up? Are there 3 other companies you could start with that $500,000 cash that's paid off another property? Could you start 3 other properties that potentially make up for the cash flow that you've lost? Something to think about and something definitely to consider when it comes to paying off your property early. And con number 3 is a lower ROI or return on investment. When you pay off a property and you put all those funds into paying that off, you've actually then reduced your return on investment because you've got, let's call it again, $400,000 or $500,000 in a paid off property, and with that $400,000 or $500,000 paid off, you're generating $2,000, $3,000 a month in income. So your return on investment becomes very, very slim. So if you could not pay that off and continue to leverage that property and use it to buy other things or invest in other things, your ROI actually increases. Yes, you're carrying more debt, but you're using less of the funds from your pocket to invest in other things because you're just pulling out of those properties to go accelerate your portfolio growth. So it actually shrinks your ROI, which I know for some people is just a bragging piece to talk about their ROI, but again, thinking of the opportunity cost and some of the things that you're giving up, you could be increasing ROI in other places, which means more cash in your pocket at the end of the day. So those are some of the pros and the cons to paying off your rental properties. And I'm sure one of those sides appealed to you much more than the other one. My personal opinion, again, as you've probably heard on this channel, is that you should use leverage to grow your investment wealth and to grow your portfolio. But I'm gonna give it a fair shake here and say I think it probably depends a little bit on where you are in your life stage. And I would relate a little bit here to a 401k. As a 20, 30, maybe early 40s, when you've got your 401k, you're a little bit further from retirement and you will often elect to be more aggressive with the funds in that account, which will give you higher profits and potentially higher losses. And so you're willing to take on more risk to gain and start to build up that wealth. Then the closer you come to retirement, you tend to get less risky with your investment in your 401k. And that is okay because you're realizing I'm approaching the point where I'm going to need to tap into that to live off of, and I don't want to find out that when I want to retire, my account has dropped by 50% because of a risky investment that I made. And so I will relate this part of things to that 401k. You may desire to pay off those rental properties if you're a little bit closer to retirement because you want that cash flow. You want as much cash flow as possible so you can live comfortably. And that's okay. You don't need to be growing your portfolio massively if you're on the retirement age side of things. Now, if you're first getting started, then you should grow it as quickly as you can so that you can build that wealth as quickly as you can. But if you've got properties in your portfolio, maybe it does make sense as you get closer to those retirement years to start to have those properties paid off. Again, there's still the cons. You still give up opportunity cost and all of those things, but it may make sense for you because of the reduced risk. But if you're growing that portfolio and you are further from actual retirement years, you may actually choose to take on some of that risk of leveraging debt and continuing to grow that portfolio, working on smaller cash flow margins for some time with the long-term outlook that when the time comes for retirement and actually walking away from fully working, that you'll actually have the cash flow at that point because of the risks you took early on. And so this isn't a one-size-fits-all approach. It really totally depends on where you're at with your portfolio, where you are with your long-term financial planning goals, and you really need to take a look at that before you consider paying off that rental property or using leverage to continue to build that portfolio. I hope you guys enjoyed today's video. If you did, please take a moment, hit that like button for me. Don't forget to leave a comment below. Let me know where you're at with your strategy, what your thoughts are. Would you prefer to pay it off, or would you take a little bit more risky approach and use some leverage on those properties? And don't forget to subscribe so you don't miss out on future videos. I'm here to help you break out of the 9 to 5, gain financial freedom, and grow wealth through real estate. See you next time.